All right. Good evening, everyone. Welcome to the webinar between Vendorcredit Bumpa. We are happy to have you here. It's been a long-awaited webinar. I'm glad that you've joined us. So we're just going to wait a bit. We can see people joining, and some of you have been very prompt. You've been trying to join like 5 minutes even before, even 10 minutes before the time, and that's just good feedback for us as well that you're really interested in this. So we're just going to wait for about like 3 more minutes. So once it's 4 or 5, we're going to begin and just get running. So just like wait a bit, we just want to get more people join us, then we'll start. So while that is on, of course, joining in from Lagos. My name is Ibukunlu Adada. I'm a marketing officer at Vendorcredit, and I'm going to be your host for today. I'm sure that some of you that are familiar with the flyer will be expecting a female face, but it's men's mental health month, and I guess that counts me being on instead. But anyways, I'm here now. Okay, so you can just tell us where you're from. Joining in from Lagos, Lekki to be precise. So in the chat, you can just tell us where you're joining us from. Tell us your name and where you're joining us from. And if you feel very generous, you can also tell us your company, your business name. So yeah, so we just let us have that rolling in while we wait for 4 or 5, and we can all start this intellectual party. So let that keep that coming in. Let me check the chat. We have introductions yet. Okay, not yet. I think if some of us are here, can also like introduce ourselves. I can see some names: Emeka Kalu, Success Adekunle, Francis. Thank you for joining. So do we have like 2 minutes out? I'm just going to whip that out to begin. One more minute. Can you tell us where you're joining us from? So not too late before we get the training moving. Welcome, Wisdom. Thank you, Francis. You're also from Lagos. Thank you for joining us. And thank you for introducing yourself with. Okay, so I think I'm just going to begin now. So again, thank you again for joining. Like I said, we're really happy that you're here, and some of you even tried to join before we started. And of course, we all know why we are here is to come and learn from how our experts and tell us about finance and how to access credit as a business person, especially ones that have been sidelined by traditional institutions. And Bumper and Vendor Credits are two companies that are very passionate about businesses and your growth, which is why we have put this together. And we're really happy that you've joined us today for this webinar. And this is not just a thing of just only passion, it's something that is driven out of staff. Over the years, we know that about 4 out of 5 businesses that start, they die out before they are fired. They fail. And one of the major reasons for that is because of finance, credits. And it's not just about getting the credits, getting it at the time when you actually need it so that you can solve the problem you have at hand, or you can take advantage of an opportunity that you have at that particular point in time. And we understand this, we know how it feels as well. So which is why we have put this together. And even some of why we have put this together for you today. So I won't be taking much of our time. I'm going to get straight to introducing some of our first speaker for today in a moment. So our first speaker today will be Mr. Chidera Enealu. He's our guest speaker and he's one of our own. He's a platform expert who has worked with various businesses, MSMEs just like yourselves, for over years. He's worked in oil and gas, finance, TV, energy, and even data analysis. And we look forward to some of those analysis with how he responds to our questions today. At the moment, he's our business development executive at Vendorcredit, and has worked with the likes of KPMG and recycling and other great outfits out there. So it's deal with growth and strategies, business improvements, operational efficiency, and I don't want to bore you with a lot of other technical terms he has been into. So without much further ado, I'm introducing Mr. Chidera Enealu to come on, and we're really glad to have you here. Mr. Chidera, can you just give us an opening talk before we get to the questions?
Okay. Good afternoon, everyone, and it's a pleasure to have you on here. Today promises to be a very exciting one. Basically, we are delving into how, for small businesses, we can access the right credit facilities that are required for you to scale up your business from point A to point B. So today promises to be very exciting as we, understand the nitty-gritties and the how-tos, to accessing the facilities that would help take your business from where it currently is to where you obviously want it to be in the nearest future. So without wasting time, I'm happy to be here, and I look forward to a very engaging session where we get to rub minds and share insights into how we can basically achieve the things that we need to achieve as a micro, small, medium business. How do we get those facilities? How do we get the credit access? How can we achieve expansion without necessarily breaking the banks or going to where we will be rejected? So today I'm happy to be here, and I hope it's very insightful as it is for me. Thank you.
All right, thank you very much, Chidera. For a moment there, I already thought you were going to just answer all of the questions before I get to ask them rather. But yeah, so I'm just going to get to the first one. I think I already spoke lightly about it the other time when I said that most MSMEs and we have like 80% or 90% being in the informal economy, and it makes it harder to get credit from traditional banks. So we see that it's an issue, especially in Nigeria and Africa at large. And the SME credit gap, which we have, is about billions. So I just want you to speak more to why we have that credit gap. So that's the first question.
Okay, thank you. Today, data has told us that Nigeria has over 40 million MSMEs, right? And these businesses contribute nearly half of the country's GDP. What that means is that we have businesses that are doing, over half of what the country is generating in terms of domestic revenue. And unfortunately, these businesses don't have access to the credit facilities that are required to push them to the next level. And why is that? Because the gap basically has been as a result of how the traditional banks were created, right? The traditional banks were created to serve the formal companies, and most of these MSMEs are businesses that are informal. So that has been a major hindrance to how they get access to cash, or they get access to the credit that they require. So with that, you would see that some of these businesses, or most of the small medium businesses, don't have the ability to meet the requirements that the banks would have put in place, when it comes to accessing credit. Today, if you go to the banks, if you go to traditional banks, they ask you for certain things that you might not really have, and that is the major challenge. So and you would not really blame anyone, but because most times people see MSMEs as high risk, right? Because you don't have someone might say they don't have the structure. Someone might say they don't meet the requirements. Someone might say that in the next a business that's starting up, say in 2026, most people give them 5 years to run and either collapse due to external economic factors or just the barrier that they've given to startups, right? So it really does pose a great challenge for businesses that play in that sector to have access to cash. So that really is the challenge. And that has resulted into a very large gap, right? You have formal sectors having access to cash because they have their data, they have the ability to meet the things that the banks are having or are requesting for, while you have the medium and micro and small businesses struggling to meet the requirements of the banks. So there is that gap. Naturally, there's going to be that gap. Credit analysis would not be in the favor of those guys, these small, medium businesses. So there is that gap. That basically speaks to why we have that gap here. Thank you.
Thank you very much. You really covered every aspect to it. So I thank you really much for that. And so we've seen that it's how the traditional banks are framed. It's part of the reasons why MSMEs have that issue, and that's why we have the credit gap which we have at the moment. And one of the reasons why we need to solve that, show ways of how to get out of that loop, which has been around for years. And at Vendorcredit, we've seen that there is a model that has been created that reflects how MSMEs actually operate, especially even on platforms like Bumpa, where all you just need is once you have your CAC, you're a business already, and you just jump on and you have your record, and it's an all-in-one business managing platform. So all you need to get your business up and going, it's already there. So including your history when you sell and all of those things you need to do. So we've seen like Vendorcredit has created a model around that transactional data and how you actually get on platforms like Bumper. So do you want to tell us more details around how Vendorcredit started that and how that has been and why that is at the moment and the success rates and some of these things really?
Okay. For at Vendorcredit, our belief is very simple. Access to credit shouldn't be a barrier to serious businesses. And who are we categorizing as serious businesses? Businesses that daily you can see their cash flow, right? Businesses that sell and receive inflows every day. So a merchant already operating on a platform such as Bumper should realistically, we should be able to verify certain data. We should be able to verify sales volumes. We should be able to verify average revenue. We should be able to verify, other consistencies, things that are very tangible to how credit should actually work. That means that if I reach out to a merchant that has been active on Bumper, for instance, I should be able to, obtain data that would be able to create a pattern for me in terms of how the businesses are running, right? That means off the back of that, I should be able to say this customer or this merchant has the ability to sell, say, for instance, daily 100,000 naira worth of goods every day, resulting to 700,000 in a week, resulting to 2.8 million in a month. So averagely, I already know what the sales pattern for that business is. I already know what the average could be. I already know how, if there is a dip in the season, what I should be expecting, because I am dealing with raw data that is daily, right? So with that, I'm able to create a financial model or a lending model, right? And say that this business is creditworthy. And if a business is creditworthy, I am looking at that as opposed to paper documents. I have the housing, I have this. I am looking at what the business is able to do daily, and with that, I should be able to grant that business access to credit, right? So instead of asking the merchants to gather documents and various things that really don't really matter at this time, we are going directly to where it really matters, which is what is it generating daily, what are the sales record, what is the order consistency, how often do we have people coming back to purchase from this person. With that, I'm able to say, okay, yeah, this is real-time data, and I can make decisions of real-time data and grant the merchants the credit facility. That's why basically we have Bumper Capital. And Bumper Capital is right in the Bumper app, right? That means whatever the merchant is doing on the app, I can use that to ascertain the level of creditworthiness and grant the customer the access to credit. Yeah, basically.
All right. Thank you. Thank you for that. And you ended with the embedded finance thing, the embedded lending, Bumper Capital. That was part of our partnership, and which is also swift in the sense of you're getting real-time data, and you can easily offer credit that they need when they need it timely, so that they don't miss it out. So they're getting credit where they already do business. They don't have to leave their business and go to a bank or go through all of that stress. And it's really good. So, and off on that, I know people also have other things they consider merchants trying to get a loan. So we see that a lot of merchants are usually skeptical about loan products, credit products generally, and because of bad experience they've had with some, if I'll say, loan sharks in that sense. And
Yes.
we all know the stories, which I don't want to get into, right? I don't want anybody dragging me on Twitter. So how is Vendorcredit's approach different? And how do you think about protecting merchants you serve?
That's a very interesting question, because we all have our biases towards credit, towards loan. But the very big but is how it is structured and how you utilize it. For us at Vendorcredit and in partnership with Bumper, it's a very, very different ball game. The ones that are very skeptical about it, yeah, your skepticism is very valid, right? But I mean, you look at the different stories that have happened. Sometimes you're hearing that there were hidden charges, there were fees that were not communicated clearly to them, and the other things that come associated with merchants collecting facilities from people. But our difference is clearly spelled out, right? First, no collateral, no paperwork, straight to the point. We are analyzing data. No guarantor is needed. We are dealing with speed, right? So we want you to understand that having access to cash as someone who is providing real-time cash flows should just be a part of your business and not a separate entity. It shouldn't be a separate process from how you run your business. I am a merchant. I sell daily, I sell weekly. Why is it going to be difficult for me to have access to cash when I can easily prove to you that this is how much I am making in terms of revenue? You can see it on a platform that I am currently operating on, and it's still very difficult for me to have access to cash. No. So what we've done at Vendorcredit is to make it a very holistic experience where our merchants on Bumper have access to embedded financial products without stress, right? The goal is for you to access credit in a very seamless way. So you're looking at, from application to disbursement, we're looking at 24 to 48 hours. And why is that? That is so because what you're doing on Bumper is already what we can see, right? We already have those data. We understand that this is what you're doing in terms of sales history. In January for this year, this is what you've done. Down to June, we can currently analyze and say this is what you've done. So just banking off your transactional history, we should be able to tell you what you qualify for. It's not go today, come back tomorrow, then you come back another day. No, we are looking at disbursement within 48 hours, meaning that from when you apply to the end of the application, to when analysis are done on your creditworthiness, to when cash is then disbursed, we've compressed all that time down to 48 hours, meaning you can rely on Bumper, you can rely on vendor credits to say, I want to increase my inventory. I want to increase what I have in stock. Before my current order runs out of stock, I can quickly apply for a facility, and I am rest assured that I will be granted because I have the history to repay back. So that speaks a lot to the intention behind what we are creating, or why we are in business, right? And why we are in this partnership. So it's structured that is structured in such a way that we are looking at the business. If you understand, if you're a businessman, you understand that most times you're discussing with the bank owners, or you're discussing with your account manager, or whoever you're asking for credit, and the person doesn't really understand the business. What is very important is, how do we understand the business? What does the business do? What is the end to end? Understanding what the end to end is, you can identify where that gap is. And with that, you can, take advantage and say, this is how we want to help your business. This is how we want to, provide, um, um, we want to bridge that financial gap for you. So in terms of inventory stocking, warehousing, financing, procurement of assets that are required for you to, basically the working capital that you need to move your business to the next stage. After we've been able to structure it in a way that we understand what you do, you then have access to the facility. So that basically is the difference between us and other existing financial houses out there, where um where we are trying the goal is basically to protect the merchants, protect the business, and design the application of the credit facility in such a way that it fits into how your business actually works. And we are not asking you to change a lot of things to adapt into how the credit facility scheme would work. Rather, we are fitting. It's a very dynamic approach, and it's a very flexible approach to ensuring that your business is fully captured, and then the growth that you're looking for, and which most times will be facilitated by access to facilities that are required to move your business to the next stage. It's at your beck and call, basically.
Thank you very much. That's so profound. I wish I could be taking notes, but I don't want to get distracted while I'm hosting this. So I was even going to allow you to speak to like the payments part, but I know you can also touch about that because more of like the structure of how things go, and some people are also even concerned about repayments and things. But we can speak more to that in part of our next question as a holistic part of it. So, what has Venocity learned for working with other platforms? Because we know you've also worked with other platforms across Africa, and how did that inform you building Bumper Capital? You mentioned that earlier, or you're responding. So you can just tell us about that. What did you learn, and how that changed the approach? When you were building Bumper Capital, how did that influence Bumper Capital?
Okay. I didn't hear your first statement. So if you can take
Okay,
that back,
so
please.
all right. So I had said I was going to also drag you to talk about repayments as well, because I know there is
Okay.
a structure for how you also get it, and maybe talk about the pre-approved part of things. Like when you apply, there's like a pre-approved offer and all of those things, but more of the repayment side of things, because I know it's something that merchants will also be
Okay.
concerned. Because okay, now taking this credits, how do also repay? So, and how all of those framework of applying and repaying and working with other platforms where you've also done this in the past, how did that inform how Bumper Capital was built?
Okay. Okay, fantastic. So I would just start with the latter, and then I would go to the repayment structure. Um, um, I mean, some of my biggest lessons, working with platforms and the merchants on the platforms, the businesses on the platforms, right? Um, over the years. The first one I would say is it's been a big learning curve, because we are sitting businesses on platforms, right? Provide a lot of tangible data, right? So we are sitting on a lot of tangible transactional data in in businesses that operate on platforms, right? You're looking at raw data, you're looking at consistent data, you're looking at daily information. So that is very, very that's a very, very key point that we need to consider, right? And when you're sitting on such amount of data that is rich, you would know that we've not really tapped into it when we are looking at how we make credit decisions. Because that's why at the moment you have such amount of SMEs and other businesses alike that don't have access to credit facilities, don't have access to credit for their businesses. Because if you're dealing with those transactional data, it makes your work a bit easier, to facilitate the credit request, right? Because you can basically analyze. So take for instance, a merchant on Bumper who is selling um, um, just, let's even say, clothing, right? You're selling clothing on clothing and other apparels on Bumper. Daily, for the month of January, you did 500,000 to 1 million or 10 million. In December, you did instead of 10, maybe from January to April, you did 10 million averagely. In April, you did 15 million. Down to August, you did around July, August, you made sales worth maybe 60 million, so 20 million per month. Then in December, November, December, you went up to um 30, 35, 40 million. So October, November, December, 35, 40, 45 million. So along the line, you would see the dips, right? You would see the fluctuations, you would see the rise, you see the fall. Now, there are reasons why at seasonal periods your revenue increases in terms of because of sales, right? Because of a large influx of customers to your store. Um, that is data that can tell you how you can even pattern the credit that customer can have access to. I can tell you, what, I would give you credit around October, November, December, very well, comfortably, because I know that your revenue is going to accommodate all that, and you would be able to, turn out and pay back confidently, because for the past 2 or 3 years, there has been that consistency around seasonal periods, right? So I've learned that there is a lot of data that we should consider in our credit decision making, and those data would only come from having access to merchants that are on the platform. And so merchants on platforms, businesses on platforms should not find it difficult at all to have access to credit. So that's the first thing. Data, transactional data, and we should use that to make our decisions. um what else have I also noticed, or what have I learned from um my experiences with I think the other experience for me is that, and it boils down to everything that I've been saying. Credits should live where the business is, right? And where is the business? The business is where we can see what is happening daily, weekly, monthly. Credits should not necessarily be paperwork or getting all those things. I should be able to say, look at what I've done on this platform, look at what I'm consistently doing, and request for this facility and get it, because I want to scale up. I want to scale up. I want to stock up. I want to push my business to the next level. All those working capital needs, right, should be should those needs should be easily catered to if you're on the platform and you're consistently selling. You are consistently showing the records. I think you shouldn't be limited to the amount of credit, as long as we understand there is the calculation for that. We understand where your limits are, because at the same time we do not want to, encumber you with so much that you then not have working capital or operational capital for your business, right? So my other experience so far from working with platforms is that credit should live where businesses thrive. Then speaking to repayments, it's very seamless, right? You sell daily. We have designed it in such a way that on Bumper, that the Bumper capital has been designed in such a way that from whatever sales you make daily, we are able to, deduct what is necessary to accumulate to your monthly repayment. So at the end of the month, you don't even feel it that you've made the payment for the month, because daily you make the sales. And it is easy for us to, deduct to build up to your monthly repayment. So if you collect a facility for 6 months, 3 months, and they are doing the daily deductions before you know what's happening, in 30 days, you've repaid for the first month. In the next 30 days, you've repaid the second month. And I mean, voila, you've covered up your facility. So it's made to be a very seamless process. It's made to be a very seamless experience. You're not having that headache of, "Oh, I have to do this." As long as your business, once from the beginning we identify that your business can accommodate the repayment obligation, you will just experience it seamlessly. So you wouldn't even feel it in your business. Deductions are made, the remittances are made back to you, and it's a win-win for both parties. Your business grows, we also get repayment, and it's a recurring process. It's more of a recurring thing. So you've done the first one, you've confidently shown great repayment capabilities. It makes it seamless for you to approach again, to go for the next one, and then on and on. So you can keep coming back as long as you're paying on time and paying the right things that you need to pay. Yeah. So
Thank you very
that's
much for that. Thank you very much. I'm going to harmonize some of the things you said, especially on the part of what Vendorcredit has learned from platforms. Is being able to see trends across sectors and even seasons for people, and that has even influenced how Bumper Capital has been built. And dragging into how you also spoke about repayments, it shows that even in the repayment and the entire flow, it's done in a way that it gives confidence to merchants who want to continually use the product and to also use it to scale their businesses. So thank you very much for that. And I don't want to drag deeper into things for finance. So we're going to be moving to our second speaker in a bit. So from Bumper, we're having Kome Ali, which is the finance lead. She's the finance lead at Bumper. So she's going to be asking some questions about finance, going deeper into Bumper Capital so that you can understand what the product is about and what it avails to you. Sukome, are you there?
Yes, I am. Good
All
evening.
right. All right. Good evening once again. It's good to have you up. So I'm just going to get straight into it. I'm sure you've been following us thus far. So your first question is going to be why did Bumper decide to build a lending product for its merchants, and why now? So why did you decide to build a lending product, and why did you decide to do it now?
Okay, so first off, we started getting requests from our merchants, seeking for facilities. Oh, is it possible to get a loan? I want to order shipment. I want to stock my shop up. I want to expand my business. Could I get a loan from Bumper? So that was one of our factors for considering creating Bumper Capital. There was demand for it. And then secondly, it just made sense at this time because we're as a business, we're developing to become like an ecosystem for our merchants where, they come and they get everything, access to everything that they need, including the payment infrastructure, operations infrastructure, shipment infrastructure. So it just made sense to also plug in the finance as in capital bit of it so that, merchants come to Bumpa and they have access to all the tools that they need to grow their business.
Thank you very much. So I think everything I've been hearing since this call started has really been data, really. So it's the request, you seeing the data request for this, then okay, now we need to do something about it. And also the passion part of being an all-in-one business platform where you can get everything for your business. That leads us into the next question, still going deeper into Bumpa Capital, really. So how does a merchant need to do to be eligible? So what do I need to do to get Bumpa Capital? For example, I'm already on the platform, or even if I'm not on the platform, what do I need to do?
Okay, so it's really somewhat easy to qualify to access Bumpa Capital. First of all, you have to be a paying subscriber on Bumpa. That way, we're able to verify your business, verify your address, do basic KYC checks so that we're sure that you're not going to run away with our money or with our partners' money. Then, secondly, you have to beyond just being a paying subscriber, you have to have transacted on the platform for a minimum of 6 months. This helps us gather data about your business, understand your business levels to, qualify you for the loan amounts that you can qualify for. And then finally, you need to have online checkout activated. What this means is that your settlement transactions, your customer transactions need to flow through our payments infrastructure for the collections bit. So this makes collections, collecting the loan amounts from your business and from you easy. So just 3 things: be a paying subscriber, be an active a transacting merchant rather for a minimum of 6 months, and finally having online payments checkouts activated on your store so that your business transactions flow through our payments platform to make collections easy and integrated.
Okay, so I think I'm starting to piece what Chidera was talking about and what you're talking about that together, so I can see how the old transaction data I said is sitting on, how it makes sense to be able to do the math for what the loan will be and when it should be and all of those data. And so yeah, that makes sense to me more now. So I think I'm going to go to the third question. I think we're really speeding at this one. So, so how does Bumper Capital fit into the broader vision for what Bumper wants to be for small businesses? So how does Bumper Capital fit into the broader vision? I know you already talked about how it's an all-in-one platform and you want them to get everything, but I know there is a vision with some things you have for the merchants to be able to reach. So how does it fit into what you want them to be, let's say like 5 years? You can just put a cap to it based on what your vision is at Bumper.
Okay. So broadly, we want to be a connective tissue for African commerce. As we're sitting at the center of merchant transactions of e-commerce in the African space. And now what this means is, I'm a transacting merchant, I have a business, or I'm about to start up a business, and I'm thinking of, what application can I use to run my business that will make it easy for me to integrate my payments, integrate my shipping, run my inventory management seamlessly, connect with even for a global audience. And what this means is to be able to launch my store and sell to people outside of Nigeria, outside of Africa, and Bumper makes all of that possible. What tool can I even use to integrate AI to my store so that I'm getting real-time performance on my business? I'm seeing what is moving, like what product line is moving, what product line I need to stop pushing, even what will recommend products to my own customers so that it's easier for them to make buying decisions, and what would overall make my business move better, faster, seamlessly, and then with the least amount of stress to myself as a business owner. Then Bumper is that platform that I'm going to be going to, because I have access to an inventory management system, that's easy, seamless. And if you already have an existing business, it's easy to migrate your products from or your store from your existing platform to Bumper. And then we are connected to like various other ecosystems in the commerce space that makes it easy. We're connected to capital, which is the reason for this call. We're connected to payments infrastructure, including collecting foreign currency, like transacting in foreign currency. We have a very seamless, foreign currency collection method that makes it easy for customers to sell in Canada, in the US, in the UK. And then we also remit their transaction to them seamlessly. We also have access to so if you want to take off the stress of thinking of how to plug in shipping to your store, Bumper has solved that. We have like various shipping partners that you can connect to. We have different themes for your storefront to make it so just customize it to the way you want. There's the multi-store location, multi-location access. So if you have multiple stores in different cities, you can also turn on that feature and manage your business across your different store locations to understand customized data for each of the different stores. There's multiple staff access so that your staff doesn't have access to the entire business because they're using your platform with you. You can segment their view. So, you give them access to only what they need to see for their job. So yes, Bumper is the center of, or we're aiming to be, and we're working towards becoming the center of e-commerce in Africa as a whole, such that when you think of business, you think of running a business, Bumper comes to your mind.
Thank you so much. That's a lot. And I've read a lot of things in that. I've read AI, shipping, and I like the fact that you're even looking at your business and your platform going beyond the shores of Nigeria, really, and taking off. At least if you don't jump out, your business can jump out before you and stuff like that. So,
Exactly.
so I really see that, and that's a lot, and it's really good for businesses. So I'm just going to ask one more question. So it's more of like can just share a story of one of maybe just a merchant or a business on your platform. Tell us about their story before they came on the platform, right? And just give an example of when they came on and how the journey has been for them. So just like a post, yeah. So somebody that joined your platform and they were able to use this, and this was what it did for them. So I don't want to mention any name with anyone here, but
Okay.
yeah, it's just like maybe talk about the 19 shoes, or just give us you don't have to talk about
Okay,
the
so
just give us a backstory.
I will give you a backstory, but I'm not going to mention the merchant's name for data privacy and the like. But I'll say that one of our biggest success stories joined us, and initially, I think that was about 2 years ago, if I'm correct. Initially, there was it was a bit rocky because the business required a sort of customization on the platform to, achieve what they wanted. But once that handshake was done, it's been like the growth has been exponential, not even linear. It's been exponential, and then they are able to basically just because it's a high volume business, there's a lot of orders coming in where ordinarily they would have been manually, trying to sort out the orders or who ordered what and all of that. Bumper has taken that stress off them. So when their customers order, they just get notifications. They go on the app, see like it's already segmented by customer order. So all they need to do is for their production team or their processing team to basically package the orders and ship out to customers. So all of this has basically just helped taking off the stress of doing the manual daily operations of the business owner, and she's able to focus on how to grow her business, to the next stage. She does aggressive advertisements, which is also, part of why her business has grown so exponentially. She's a household name in the country. Another example I'm going to give another example, also a merchant, but this one is in the she imports things to sell, and then she runs sales, a lot of sales. And basically Bumper has also helped, sales periods can be very tricky for merchants because there's a lot of traffic to your website, your frantically trying to get everything to work well. But then Bumpa helped take again all of that stress from her. So the platform was sort of set to scale as merchants orders scale, or as the frequency of orders are scaling, the capacity of the platform scales, so that there's no break at any point when people are placing orders. And from the feedback of the last sales that she held, it went really well. Those are like two examples. And then she was able to use the integrated shipping to also seamlessly just send out, instead of trying to plug in shipping details again. As the orders are coming in and they've processed, they move it to shipping on the platform, and that just takes care of the shipping part. So the shipping partners come and pick up the orders and go to deliver. But that handshake between receiving the order and then just moving it straight to shipping on the platform also took off the stress of her having to then manually go to the shipping partners platform, the shipping platform, to start imputing all the requests one after the other.
Thank you so much for sharing those. I'm glad you even gave us two. That's good. So I think we're going to pause a bit. If you have questions, want to ask our facilitators, I think we can just ask them now. Are there questions we want to ask? You can drop them in the chat box. I'm just going to take some questions which we had before the session started. So I think I'm just going to go with you first, since you're already speaking. Then before Chidera will join us on the question. So if I've not taken a loan before, right? And I'm a merchant, I've not taken a loan before. Let's say I've been doing businesses for a bit, and now Bumpa Capital is here. Maybe it's one of my issues. I don't even want to. I'm not interested in all of that stress. So what advice would you give me when applying? What advice would you give me now that Bumpa Capital is out and I want to apply? What advice would you give me before going ahead to apply as a merchant? Do you want me to take that again?
Yes, but sorry, is the question for me?
Yes, it's for you. Yes.
Oh, I missed that part. Apologies. Okay.
Sorry. Yeah, so I'm just asking because Chidera will come and take the other one, right? So these are just questions we've had before Pokemon. So I've been on Bumpa platform for a bit, and one of my major reasons of not even going out is because I really do not want to deal with the stress, right? And part of what we said on this call is how fast it is. We understand how merchants run on platforms. We've had Vendorcredit that deal with other platforms, really have that understanding. Even imagining what an all-in-one business platform is, it gives us more rich data. So what advice would you give me that would make me take that final step to actually try out Bumpa Capital?
Okay, so the advice I'll give is, if you're already transacting on the platform, you don't have an issue. We already have your details and your business data. All you need to do is, first off, reach out to us that, I'm thinking of doing this, and then our success team would handhold you through the process so it doesn't feel overwhelming. You just need to consent to us sharing your details with our loan partner, in this case Vendorcredit, and then probably just provide us with a few more documents for identification, your KYC, your bank statements, ID card, like 3 or 4 additional documents. And if the reason you are requesting for a loan is, to probably order some goods from China or expand your store, just supporting something that supports your request for that loan, and then that's all you need to do. And after that first process, Bumpa and Vendorcredit to take it up from there. The only thing you need to do would be to probably just sign some forms and then sign up on the Vendorcredit platform, so that on your own end, you can also track your loan on a daily or monthly basis, depending on your payback period. But basically, what I would encourage you to just reach out to our success team. They're very, very wonderful people on there, and they will handhold you through the process so it doesn't feel stressful or painful for you. As a matter of fact, they will go to war on your sake. So yeah, just reach out.
All right. So what I'm hearing is, aside from the general KYC, KYB you need to do in registering, because it's even a business platform and documents necessary for that, you just need to consent to us having that data exchange, and
yeah,
it's that easy. So there's no reason to still hold back. So for you, Chidera, thank you very much, Kome. I really appreciate it. It's really been an awesome time with you. So I'm just going to ask Chidera his own question now. So what is the biggest misconception that small businesses have about accessing credits? You can tell us one, or you can tell us more than one, if you want to. So what are the biggest misconception that you think that business owners have based on your engagement with platforms and merchants on those platforms?
Okay. I would say there are various misconceptions. If we're looking at the biggest, or I'll just put them in a bucket. We have one, right, that financial institutions will not answer them because there are more of playing in that medium, small, micro sector. They might not have the data, or that the financial institutions will require so many documents that at the end of the day might not be requested for. So for instance, they might think that we'll be asking for collaterals to cover up with the transactions. They think that we're going to ask them for a land somewhere in or your state that's, or they'll think that we are going to ask them for a house, So first of all, the education or the knowledge around the requirements for accessing credit facilities is a bit misconstrued. So people don't really know what, for instance, what we would ask for when we're asking for credit facility, right? So that misconception is needs to be addressed at a very large scale. And you would see that once these business owners begin to understand that that the things that they've been thinking about are not really as it is, and then they now have a proper understanding of what requirements are really needed when it comes to accessing facilities. You will see that there will be that almost 180 to 360 change, right, to accessing facilities. Another misconception is the timing it takes to to cover up or to finish an application. So sometimes some people say, oh, I need this thing today, or I need this thing in the next 1 week. But I think that if I go to the bank, it takes me 3 months, it takes me 2 months. But that's not, now we're in the age of AI, right? Aside using AI to, analyze your documents or do your credit worthiness, which we still have the human interaction still doing a lot. Speed has been reduced drastically. That's the importance of technology. Speed has been compressed to a very small time frame. So you can request today, and in less than 72 hours, you're granted the facility as long as all requirements have been met. And then again, I would speak to the interest rates. I think business owners are always saying that, financial institutions are, they always think that all financial institutions are out there to, choke the business as opposed to letting the business grow. So they feel like you're going to take I'm working for you. There's that slogan that they use. It's as if I'm working for you. So at the end of the month, I'll just pack all my money and give you. But that's not the case, right? Because the rates are considered, your margins will be considered. What do you make on the business, and what are my rates? That's why I said in the beginning, if you remember, that it's structured in a way that it will fit into your business. It's structured in a way that we are not telling your business to adapt. Rather, we are looking at how it can make your own business grow, and then we can structure it in a way that your business grows, we grow, right? So we're not giving you facilities that at the end of the month, you pack everything. At the end, you don't even have your own operating capital that you would use to run your business for the next month. How do you now intend to pay us back? Literally. So we are not coming out to stifle your business. It's a partnership in the sense that we give you the facility, you work with it, you expand your business, you have more returns, you're able to, pay back, and also repeat cycle. So those little misconceptions are, once we can address them, once there's that knowledge, that forum where we can address them and people have that understanding, I think like there would be a change in how people perceive credit and how they can use it to utilize their businesses.
Thank you very much. And I think we're at one of those kind of forums right now where the information is being shared so that we can change the minds of people about these things. And I see we have questions in the chat already. And I feel that some of the questions have been kind of answered from our response, but I'm just going to go through them again. So David Joe is asking, he said you're saying that between now and 6 months seems like quite a long time for a loan facility. I'm thinking maybe that's when you were speaking to maybe what they should have done before they can apply. I think it doesn't exactly people. I'll allow you to respond to it. And for that I need now for business, are there alternatives? I think that will go to Kome. So maybe you explain what the 6 months requirement is so that that's clear. You're muted at the moment, Kome. Okay.
Yes. So, yes, I agree that it does seem quite a long time, but that is only if you are a new merchant to Bumpa. So if you've not used Bumpa before, you've not interacted with us before, and then you're just, signing up on the platform, you just pay the subscription, then that is the only instance that you now have to wait for 6 months and operate your Bumpa account. And the reason for this is so that, we can have your business data, like I explained earlier, so that we are able to qualify you, say, okay, how much can you access? What's your business level like? And how much a loan facility can you actually access? It's just like a data point so that we're able to adequately profile your business and support your business the way it needs. For instance, if you're doing for a business of 10 million naira monthly, and then you're requesting for 100 million naira to pay back in 3 months, you can see how that will be overwhelming for you, the business owner. And that is why we need your business data. And that's the reason for the 6 month wait. But then the 6 months is only if you are new to Bumper. But if you're already a merchant on Bumper, you're already a paying merchant, and you've been using our platform, then you don't need to wait 6 months. You can apply immediately. But the only thing is, if you've not turned on your online checkout, you need to turn that on so that we're able to recover the loan amounts from you. That's the reason for that.
Thank you very much. So I think it still sticks back to the data thing. It's just the time required to get the data enough to be able to access and be able to offer you what we've promised. So I think the second question fits, and which we're asking each other, it fits into what you were saying about the flexibility based on what your margins are. So I'm just going to read out the question from Anya William. So he's saying, do you have a fixed loan interest, and how long is your repayment schedule?
Okay, great. So on the variances or on the length of the repayment schedule, again, we look at how your business is, and these are conversations that you can have with the team, right? What are you comfortable with in terms of repayment, and what would also serve your business well? So when you're looking at repayments, you have short-term repayments, right? Ideally, you're looking at 3 months, you're looking at 4 months, you're looking at 2 months. You can also go down to 6 months for repayment, depending on the credit that you have gained access to. So those factors also determine how and you're looking at the interest rate that you're paying again. So you would look at all that, and then you can be able to compute and say, ideally, a 3 months should be convenient for you. What is your average turnaround cycle for your business? So if you have inventory, how long does it take you to, convert your goods to cash, right? Those are things that you look at and say, okay, after understanding the business, I buy my products June 20th, I stock up my store. It takes me 2 weeks to turn 10 million naira worth of goods in the store to cash physical. Then I can repeat that cycle. I can turn 10 million to another 10 million in goods again in cash in another 2 weeks. It means in 1 month I can have 2 cycles. Right now, so that means if I'm coming to you if you're coming to us to ask for 50 million naira, and averagely you do 10 to 20 million in a month, right? I have an understanding of what repayment cycle would work for you, because I know how long it takes you to convert your inventory to cash, right? So it's not that we are going to just come and say, oh, you need 6 months, or you need 3 months, or you need 5 months, just throwing out numbers there. We basically look at how the businesses work, how long it takes for you to turn your goods to cash, and then provide you with the required rates and tenor, as the case may be. When you talk about the interest rates, right? Do you have a fixed loan? What's the question again? Do you have a fixed loan interest? So it varies. There are ranges. So depending on what you do as a business in terms of revenue generation, right? You would fall into what we call classification or tiering on the platform. So there is a higher level where the revenue generated is massive. Then you have the ones that fall in the middle class, and then you also have the lower class. So depending on where you are, we have various rates that would apply to you as a merchant.
Thank you very much for answering that. So I think I'm just going to go to the next question. This would be for Kome, and I think it's a bit off, but I think you touched it slightly when you were talking about what your plans are and why you decided to have Bumper Capital, what your vision for your merchant are. So I'm finding how to pronounce the name right, but in text or something, I said, I apologize if I murdered that. It says, person says, how can Bumper help me in my logistics? And maybe I should take it together with the next question. Maybe Chidera can button, which I don't think it covers what we're doing at the moment. Say, please kindly talk on how to access grants or something. Yeah, access to grants. So those are the two questions. So I think Kome, you can take logistics, then I can brush on the grants, then I'll allow Chidera to take it.
Okay, so for logistics, we have shipping partners integrated on the Bumper platform. So if you select one of them, like there's a connector where you just turn on, and then for every order that comes in, you're able to directly move it to shipping on the app. If you drop your details, one of our team members can, have the conversation with you and walk you through the how to turn it on your app, so that for every order you get, it directly moves to the shipping partner for them to come to your store to pick up.
All right, thank you for that. I think the other question is on grants. I don't think we do grants at the moment, but I'll allow Chidera to speak to that.
Okay. Interesting. Thank you. That's very, very so at the moment we do not offer grants. But we are also very happy, to point you to agencies, or to point you in the right direction to agencies that will grant you your request. That I think that answers that. Yes.
Okay, so I see we're also having questions from other loan solutions, other products. This is from Oris Ubeye. I hope I got that correctly. And the person asks, please, what's the process of purchase order financing, and how long will it take to have it processed? So I think we're running out of time, but you can just speak briefly to that. Maybe we'll pick that up and we'll take that via mail and reach out to Oris Ubeye. But we can just speak briefly to that, General.
Okay. So purchase order financing, very straightforward too. I mean, ideally it might apply if you're a merchant on the platform. So you would have to come with the documents, right? You have a purchase order from a reputable counterparty or business that you're working with. We validate it, right? And then there is a required cost to execute that purchase order. Now, what that means is that, take for instance, theoretically, you're giving a purchase order of 100 million naira to supply certain products to the counterparty, and it costs you 70 million to execute that job. What that means is that we will be able to, we'll be able to, look at how that cost of execution would be split into two, where we would, fund you a chunk of it, and then you would also drop your equity. Once that is done, we disburse to you. You then go ahead to execute the job. The counterparty validates, payments are made back into into the account that has been created for the purpose of that transaction. But I mean, for us to delve deeper into this, I would suggest and I would recommend that you please, Mr. Oris, you can drop your accounts or your email address for us, and we will reach out to you so we can pick up this request. Let's see how we can work hand in hand to process this facility. Yeah.
All right. Thank you very much, Chidera. Thank you very much, Kome. It's really been a great time with both of you, and it's really been good. And I'm sure our attendees have also learned a lot as well as regards to finance and how we can make things better. So I think in the chat we'll be dropping, there should be a mail that should drop for Mr. Sube to yes, or Mr. Sube to also reach out so that we can talk to them more about purchase order financing. I think that's it for today. We really appreciate you. And also, thank you very much, Mr. Harris. I've seen your mail as well. So we'll also like reach out and pick it up from there. So it's been a great time. If you have any other questions, please feel free to shoot at us. I'm just going to call it out, hello@vendorcredit. You can send us a mail at hello@vendorcredit.ng. So feel free to mail us at that if you have further questions and if you want to do any of our loan solutions and if you want any other questions you have, please reach out to us. And you can also reach out to support@Get Bumpa, more especially to ask about the Bumpa capital and how you can get on this and take your business to the next level. So really appreciate you. We thank you everyone for being here. And thank you for our partners, Bumpa. It's really been a great evening. So let's have a wonderful time. All right. Thank you very much. Bye, everyone.